It is time for Consumer Confidential with David Lazarus, and what a busy day you've had.
Yeah, you really have. I mean, everyone is talking banks right now.
Right. And it's the huge story, make no mistake about it. And there's so much to unpack with this story that you hardly know where to begin. But as I said in the tease, let's look at stocks first. The market should have been routed today. Silicon Valley Bank in the West Coast, Signature Bank on the East Coast, they both collapsed. The FDIC steps in to take over both banks. The Biden administration has to step in, move the goalposts and say depositors will be protected regardless of how much money they had in there. And Wall Street does not go completely downhill. That's interesting. Now, the reason for that is Goldman Sachs came out in the morning and said, you know what? The upside to this is the Federal Reserve won't dare to raise interest rates next week as had been expected. Instead, Goldman said, we think they're going to give a pass to this month, maybe come back to the rate hikes in May, but we'll have to see. Well, that's big news, obviously, for Wall Street, because if borrowing costs remain steady, that means there could be more liquidity for all these companies that need the extra money. So maybe that's a real plus for the market. And that's why we saw stocks going up earlier. But then cooler heads prevailed. And most economists looked at what Goldman said and said, no, that's not right at all. Sends the wrong message. What it says is we care more about protecting banks than we do about consumers. And there's no way the Fed wants to get that out there. So now the over-under says, yeah, there's still probably going to be a quarter-point rate hike next week. That's now off the table. In the closing minutes of trading, the Dow went down by about 90 points, but that's not catastrophic by any stretch. What that says is, perhaps, we're through the worst of it. Traders accept that this might be contained to these two banks. The Biden administration acted quickly to put out the fire, and maybe this isn't going to be like something we saw back in 2008. Maybe it's two banks that got a little too big for their britches courting tech clients, and now maybe they'll learn their lessons, and hopefully others will too, because moral hazard is a very big deal in a situation like this.
And explain what that is.
Moral hazard is an economic concept that essentially says that if there are no consequences for bad corporate behavior, that behavior will be repeated again and again. That's why the bailout back in 2008, that was a very big deal, because what it said to the banks who got us into that mess in the first place, it said, there's no repercussions. You go about your business. And then they did. And the fact that we're back here again says that the banking industry has a very hard time learning its lessons.
President Biden has come out and said that the managers, the people in charge of this, there's going to be some consequence for them. We're also seeing lawsuits now by a class action lawsuit against SVB, right, at this time. So we are seeing something happen here. But I'm curious for the average consumer, the average banker who's there, who's looking at this. They go, do I take my money out? Should I be worried? What do you say to those people?
And that's why we saw lines forming this morning at many of the banks. I mean, the fact that Rachel was out at First Republic Bank, their stock down by 62% today, but she couldn't quite find people panicking. That's a good thing. Earlier on today, there was a sense that I better get my money out or otherwise I'm going to be completely hosed, as is my family. Here's what you got to remember. Up to $250,000 is insured by the Federal Deposit Insurance Corporation. That means if you've got $250,000 or less in the bank, you're covered. Whatever happens, even if the bank goes under and goes bankrupt, you're still covered. The vast majority of Americans have less than $250,000 in deposits, so they're safe. They are protected. What we're talking about here are a lot of riskier clients, tech companies, crypto companies that are still trying to figure out how do we get our money back, because in the case of Silicon Valley Bank, billions of dollars was left exposed without any insurance coverage, and that's a real issue. That's why Biden stepped in and took away that $250K cap and said, however much you have, you're covered. But that's not great either, because what that tells these big tech companies is It doesn't matter that you went overextended yourself in that way, that you didn't manage your money very well, will protect you. And again, moral hazard.
We discussed this further. We'll be covering it tonight on the evening news. So I appreciate you sticking around and talking to me about that. It's so complicated and hard to wrap up in 2 minutes, 30 seconds. And I think Rachel did a great job with First Republic Bank today.
Absolutely. But the bottom line for all of our viewers, you're probably not going to be in any trouble. Your money is safe. There is no reason to panic.